Okay, traders, a very good afternoon here on the 21st of August 2020. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, and the Traders Open Day. And I'm looking at the Euro-Japanese yen because today we want to teach a topic on actual reward risk ratio versus projected reward risk ratio. This is one of the biggest myths in our industry, and we're here to completely clear it up today so we have total clarity on this. Myself and Tiro have spoken to well over 25,000 people through conferences, trading events, talks that we've been invited to deliver globally. And the most important thing that we ascertain when we speak to other traders is the fact that they don't really understand reward risk ratio in a great deal of detail. People understand the basics of it, but they don't understand what it really is all about and what their real reward risk ratio is either. So first of all, before I go into more detail, I'm going to just explain what reward risk ratio is for those of you maybe that are newer to our channel or newer to trading, just so you have a complete understanding. I know for some of you, you're already trading the markets already, you have a clear understanding of reward risk ratio. So this is just going to be a recap for yourselves. We're going to take a trade example here on the Euro Japanese yen, which we took on the 12th of August. And we entered the market on this yellow line just here. So this was our entry. And our entry into the trade, let me just refer to the journal, was 126.01. This was on the cash-in 4.0 strategy. Our stop loss on the trade was 125.59. And our target on the trade is represented by this top line just here, which you can see that actually the price didn't actually meet. The target is 126.80. Okay, so 126.80 is the target just there. So this is what we are understanding as the trade details. Now we need to know this information because we want to work out reward risk ratio. So reward risk ratio is quite simply, in this case, the target take away the entry price divided by the let me just think this through. So it's going to be the entry price minus the stop loss. Okay, so on the top here you have reward, which I'll call RE for short, and on the bottom here you have the risk, which I'll call RI for short. Okay, so risk and reward. So if I were to do the math here, you're going to see that 126.80 take away 126.01 is 79 divided by your entry, take away your stop loss, which is going to be in this case 42. Okay, and 79 divided by 42, if we do that math here real quick, and I'm going to use a calculator, 1.88, okay, is the reward risk ratio. So that basically means we've got a reward risk ratio of 1.88 to 1, okay. Now, what I want you to understand about this is that this is our projected reward risk ratio. So when I go to these different talks and when we're invited to speak all around the world, traders come and tell me, yeah, my strategy has 2-to-1 reward risk ratio or 5-to-1 reward risk ratio. Some people tell me I have a 20-to-1 reward risk ratio. And I say to them, that's great. What's your actual reward risk ratio? And at that point, they don't really know. And that's understandable because not a lot of people in the industry really talk about this. And it's important that we understand the difference between what we call projected reward risk ratio. So we have projected reward risk ratio, and then we have actual reward risk ratio, right? So projected is what we have here, which is 1.88 to 1. We wanted to achieve a 1.88 upside to 1 R of 1 unit of risk. We wanted 1.88 units of upside against 1 unit of risk. Now, you can see this trade didn't hit our profit target. It never hit our 1.88 projected reward risk. So the question is, what do we actually get on the trade opportunity, right? And then not only on this trade opportunity, but then actually what did we obtain over all of the trades that we've taken in August? And that's what I want to drill down with you on the journal today. So let's just jump onto the journal at this point. Let me bring that over to the screen. Okay, so here is our journal for the month of August. So actually, this is our cash-in 4.0 journal for since the beginning of the year. Let's go ahead and just filter this down so that we have only the August trades in play. Now, remember, we're not counting August towards the equity curve. So this is just purely for demonstration purposes, what I'm showing you here. It is purely for the purposes of doing this calculation work that we're doing here on reward risk ratios. So, okay, if I take a quick look here, you can see I've done some of these calculations already. It'll help you later on with what you need to look at to understand this. So if you look at the trades that we've taken here in August, first of all, let's make a note of how many trades that we've taken, right? So we've taken a total of 13 trades, right? So 13 trades have been taken here in the month of August so far. Now, I know there's going to be more trades on Sunday evening because I can see the market setting up with some new cash-in opportunities today. So we're going to be taking more opportunities on the Monday market for Sunday evening in the live trading room. So we'll have more than this, but as of this moment in time, we have 13 trades for the month of August. Yeah, we could pick any month, but I'm just looking at August because it's the month we're in right now. So what do we need to look at? So here you can see this column talks about our expected profit to loss. Okay, this is our expected reward risk ratio. It is what we are expecting to take on the trade. There's the euro yen trade that I was analyzing with you all, right? It was a 1.88 to 1 projected reward risk ratio. Now, what do we actually obtain on the trade? We actually only obtained 0.93. So when the way we've calculated this, of course, is by looking at where we got out of the market. So we replaced this number with the target figure. In the calculation that I showed you earlier, the exit price is replaced with a target figure, and that's what gives us this number just here. So for 1 R of risk that we had, we obtained 0.93 R of upside. Okay, so for 1 unit of risk that we put on the market, we put on this trade, we obtained the upside of 0.93 units of upside, right? That's what actually happened. So now in the month of August, as I said, we've taken 13 trades so far, 1, 3. Now, of the 13 trades, you can see you've got, let's see, okay, you have 7 of them have won, okay, which means naturally 6 must have lost, right? So to work out what our average reward risk ratio was for the month of August, to see what we actually obtained on the market this month, all we're going to do is quite simply, we're going to work out what the average net profit was. Okay, so what's the average net profit in this particular case? The average net profit is 1.21. If I take all of the winning trades, you can see there Excel tells me that the average of these winning trades is 1.21. Okay, 1.21. You can see the number just there. So that's the average net profit. Then we take the average loss. So we're looking at these losing trades, and we're taking the average loss, and you can see all of these 6 trades that hit their stop loss. They all hit the initial stop loss. So we're out on the initial stop, and they lost us 1% on average each. So we have our average net profit and we have our average net loss. And all we're going to do with the average loss, so with the average loss, all we're going to do here in essence is just give the absolute figure. So the absolute figure is basically the same figure as the average loss, which is actually -1, but we just make it into the positive. So we got 1. And we do 1.21, which is average net profit, divided by average loss, and that gives us 1.21, because obviously this just cancels out. So 1.21 is our actual reward risk ratio that we have obtained in the month of August for these trade opportunities. So you can see, if you look here, the average expected projected reward risk we wanted was 1.83, right? This is really important. So our average projected, so not what we actually got, but our projected, this is when traders tell me 10 to 1, 20 to 1, 5 to 1, etc. For us, that number was 1.83 to 1. That is what we expected to get. But what we actually got, and this is the key figure here for you all, what we actually obtained here on the market was 1.21. And you can see that there is a difference between the average projected reward risk and what you're actually getting. And to understand and know this figure in your own trading is really critically important. You should go back and analyze your own trades and work out what your actual reward risk is. And leave us a comment in the box below. Let us know how you're getting along with that. If you have any questions, then you can ask us. But if you want to see more great content like this, I find it really difficult to find on the web, that we're building here at Master the Markets, that we're thinking about as well from reading books and talking to other traders. We will be happy to publish more and more of this type of content. So definitely subscribe to our YouTube channel, like our video as well, and share it across social media. Share it with your friends. Let them know that there's something out here that we can use to further better our trading. It's all on our YouTube channel and it's all out there for free. Our paid content is even better, even if I do say so myself. Okay, with that said, that's the topic on demystifying that myth around reward risk ratio, projected versus actual. You can see that we've done a real life calculation here using the August trades on the Cash-in 4.0 system at Master the Markets live trading room. Good, so we're going to move on quickly. We're going to do a quick market overview to see what the market's been up to this week. Okay, so you can see here on the Euro-US dollar, the Euro-US dollar continues to strengthen, and this long phase came to an end into around about the beginning of August, where we saw the confirmed swing high setting up mid-August. But then the market quickly turned again. It knocked out the previous high, and then it's come down again. So there may be a retracement at this stage. We're going to be looking to get involved in the Cash-in 4.0 strategy short in the next few coming days. So be on the lookout for that in the trading room. Dollar Swiss franc, again, after a very, very long elongated phase, had a little reprieve and then another huge phase to the downside. Again, here you can see it's clipped the previous low and is looking at potentially confirming a turning point here as well. So we're looking to catch that using the Cash-in 4.0 as well. Didn't qualify as a prior run as trading strategy set up for us. We didn't take it long on that. GBP USD, again, you can see that we had, after a phase, we had a little bit of accumulation that set itself up here. And then you've had what you could look at as a potential market manipulation spike here, which could mean that there's a profit release phase setting up to the downside. So again, we're being on the lookout for that. We'll only get involved, of course, if the Master of the Market strategies give us the go-ahead. But that's what it's looking like to me at the moment. So this is quite an interesting phase. And this is also an overdue phase as well. According to our open equity data, this has already gone into the top, it's only gone into the 20% of phases that actually run for this period of time. So it is already an outlier phase, and we are now looking for a pullback, which is a little overdue according to the averages. Dollar Japanese yen, we're actually short on dollar Japanese yen on the live trading room. So we're actually short on two strategies. We're short on the Liftoff 3.2, which we entered the market on the low of this primary just here. We're also short on Gold Bars Live, which we entered on the close of this green bar. We entered that short as well, just there. So we are pushing lower at this time, and you can see that we are continuing to get more upside just here on the actual market just there. So that's the idea. We are continuing to look at trade opportunities to go short. Let's take a quick look at the Euro Japanese yen. So Euro Japanese yen, again here you can see that the market is pushing lower. We've confirmed a high already, and we are moving lower. It looks like this low may be taken out over the next few days. Who knows? Be on the lookout if that does happen. Maybe more potential downside to come. The Aussie dollar, again, has been a very elongated, extended upward move. You can see here again, according to our open equity research, this has already gone into the very small percentage of phases that we have that we expect to run this particular distance. This has moved 873 pips from the prior low at this time. 878 pips is the move. And according to our research, only 12 out of the total analyzed 273 swings actually reached that distance. You can see it's actually less than 5% that has actually reached that point, 273. Yeah, 4.3% of phases actually do what we're seeing here on the Aussie dollar. So again, well overdue in terms of a confirmed turning point, and we are short on that as well at this time on the trading room and the primary runner strategy setup. Obviously, it makes sense to be short a phase that is so overdue for a pullback. So that's important to understand just there. Let's have a look at the dollar index, Brent crude oil as well. This is a market that we're looking to short as well. If we get a new confirmed turning point on the trading room, which looks like could potentially happen today, we'll take this short on Monday. On the dollar index as well, potential new swing low confirming, which we could look at on Monday as well to take on the cash in 4.0 trading strategy. Silver as well has started to accumulate here a little bit. We did take a losing trade here on the cash in 4.0 strategy on this day, which was the Tuesday. You can see we looked to take that long, but then that pushed against us. So not really too much we can do on that one at this time. But if it confirms a new high, we'll look to take that short, of course. But that's pretty much it in terms of silver. Again, elongated phase, which finally reached a confirmed turning point. This would have been in probably the bottom 4% of phases that actually run this type of a distance on silver. So I was actually explaining to one of our traders in the live trading room that our objective through the one version of the cash in 4.0 strategy is not to capture this entire move. We have other strategies that look to do that. So Liftoff 3.2, for example, is a strategy that looks to capture longer term moves. We also have cash in 4.0 OE, which also looks to capture longer term moves as well, which has a more conservative trail and stays in the trade longer than the cash in 4.0 fast version of the strategy. So different strategies, different objectives, of course, and I'm sure your trading is the same as well. It's pretty much it from me today. I look forward to speaking to you all soon. Until the next time, stay disciplined, follow your trading plan, keep trading like a master. Bye for now.